The price of Tesla shares has continued to decline, down almost 52% this year and more than 26% so far in November. Even though the automaker's stock was the most actively traded on both exchanges, it performed the lowest in the S&P 500 and the second worst on the Nasdaq. It would likely be Tesla's worst annual performance ever if that trend keeps up. Welcome back to Everything Tesla Stock, everyone. Along with shares of other electric vehicle manufacturers underperforming in the overall equities market, Tesla shares just closed at a new two-year low. The shares of the automaker continued its downward trend, closing at $163.20, the lowest price since November 2020. The previous weeks have seen significant declines in the shares of automakers like Tesla as concerns about China's shutdown have reappeared and oil futures prices have fallen to their lowest point since January. Even so, a number of Tesla investors continue to view the stock's recent two-year low as a chance to stock up on further Tesla shares. Why then do more individuals continue to purchase Tesla stock? Let's investigate. Before we go, though, please remember to hit the notification bell, like, and subscribe if you enjoy this kind of content in order to stay informed about all that Tesla is up to. The automaker's stock fell to a record low earlier this month when its CEO, Elon Musk, sold 19.5 million Tesla shares to pay for his acquisition of Twitter. A number of bullish remarks were made in the wake of the sale, but some investors were alarmed because they thought that this marked the start of an even more difficult trading season for Tesla investors. Tesla's stock growth momentum for the year has been further dampened by the Federal Reserve's hike in interest rates. Tesla's most steadfast fans are uneasy as the company's stock price has dropped by almost 50%. The stock ended the season stronger at $180.19, but it just fell to a 52-week low of $176.55. Recently, Tesla announced a massive recall involving over 300,000 cars due to a software issue that may result in intermittent tail-light failure. Regarding Tesla, there is currently potential for both bull and bear scenarios. Naturally, the chart shows the negative side, with the stock falling below moving averages and a seemingly significant downward momentum. It will take a great deal of work to undo. On the plus side, though, it makes sense to assess the company's business plan and long-term prospects. In addition to leading the EV market in sales, Tesla also dominates the battery market, which still has a lot of unrealized potential for growth into other markets like trucks, boats, motorbikes, and other applications. In the upcoming years, the manufacturer could see growth rates of up to 50%. In 2020, Tesla declared its intention to attain an average yearly growth in car deliveries of 50% over a multi-year period. They went on to say that other factors that would affect the rate of expansion were the supply chain stability and capacity, plant uptime, operational efficiency, and equipment capacity. Musk has stated that the 50% growth objective is a multi-year average, with some years experiencing stronger growth than others, even though the automaker anticipates growth to increase at this rate. Musk restated Tesla's goal to reach 50% earlier this year, in spite of supply chain problems, which he claims were the primary impediment to the company's expansion. He still projects Tesla's growth to comfortably surpass 50% in 2022. Tesla stock has had serious difficulties due to a number of issues. Tesla's new auto facilities in Texas and Berlin are losing billions of dollars, according to Musk's June statement. Increasing output is difficult, particularly in light of the battery shortage. The carmaker is making every effort to increase output at these plants, nevertheless. Although there have been recent worries about China's declining demand for Tesla, since China is not Tesla's largest market, there isn't much cause for alarm. Deliveries and earnings are expected to rise when manufacturing problems are fixed at Tesla's U.S. factories, which would boost the stock price of the firm. Recent reports claim that Tesla intends to use automation to boost output at its Fremont manufacturing, similar to what it accomplished in Shanghai. In an attempt to increase output at its U.S. operations, Tesla is allegedly moving engineers and production workers from its Shanghai facility to its Fremont, California plant. Additionally, Musk announced on Tesla's Q3 earnings call this year that the company intends to produce 1,000 gigawatt-hours of batteries annually in the U.S. In the U.S., this might make the automaker eligible for tax credits and FSD subsidies. During Tesla's third-quarter results call, Musk stated that the automaker anticipates complying completely with the terms of the Inflation Reduction Act, enabling customers to claim tax credits on new electric vehicle sales. This includes climate-related incentives for people who buy electric vehicles, such as a tax credit of up to $7,500. The car's battery needs to meet a minimal requirement of parts obtained from the US or nations with fair trade agreements in order to qualify for that credit. Tesla continues to be quite profitable. The stock performance data, which demonstrates a lengthy history at exceeding Wall Street expectations, makes this clear. The carmaker made $1.05 per share on $21.5 billion in revenue in the most recent quarter. By the fourth quarter of 2022, Tesla might be producing 2.1 million cars at a rate of around 40,000 per week. Even if you're an investor looking for a low value and to buy solely stock, it might be too soon to start piling up Tesla shares, even though the company still has a lot of promising future fundamentals. However, it's advisable to hold off until you witness bullish moving average crossings or momentum, neither of which Tesla is now exhibiting. There is still a chance that Tesla won't fulfill these goals, and it might even see some discrepancies in the completion of its anticipated projects. Musk is notorious for missing project deadlines, as is well documented. Even though Tesla has been successful in scaling up many of the projects it has previously announced, many more are still in the planning stages, and there is no assurance when they will be completed. A prime example is robotaxi. When will that be released at all? By 2020, the robotaxis would be accessible in certain U.S. markets, according to Musk's 2019 announcement. He also said that Tesla is planning to produce a vehicle without pedals or a steering wheel. However, neither 2020 nor even 2021 saw this occur. During an earnings call in April of this year, the CEO of Tesla reiterated that the robotaxi will be operational by 2024. All we can do is hope that the robotaxi makes it by this deadline in the end. Even while the chart currently shows the shares trading considerably below important moving averages, it is still true that Tesla stock has great fundamentals and solid growth potential. In the EV market, Tesla, along with China's BYD, is the undisputed leader and innovator, even though its stock price is still declining. Both businesses are without a doubt the most profitable leaders in their respective fields, mostly because of their strong financial positions, which have enabled them to innovate and increase their market shares at the same time. The value of Tesla's shares has increased by more than 2,300% in the past 5 years, despite the fact that its stock price has consistently increased. A break this year, similar to many thrilling and skyrocketing growth stocks, Tesla has continued to be among the best growth stocks since its 2010 market debut. The carmaker is outperforming significant, established auto majors. Even if Tesla still experiences ups and downs, like the most recent logistics problem, it has really produced astounding profits for patient and prospective investors. To be honest, Tesla is not the only automaker having trouble with the present financial crisis. The American depository shares of a number of Chinese electric vehicle manufacturers, such as XPeng and NIO, also lag the overall market. Similarly, stock prices of Ford and General Motors decreased little. Despite the small difference in growth when compared to these automakers, Tesla is still expanding. The carmaker has gone a long way from its unsteady beginnings and is well on its way to returning to its former heights of glory thanks to its innovative projects, cutting-edge offerings, vigorous growth plans, and devoted following. Tesla is still in its early stages of growth and is not yet a mature firm. The stock price may grow more steady and profitable in the next years if auto production and profitability rise. It is true that Tesla's stock valuation at this time is illogical. Those who have supported Tesla have done so because they have always trusted Elon Musk's vision for the company. All that can be hoped for is that the stock will quickly react appropriately. How about more individuals purchasing Tesla stock, in your opinion? Please share your thoughts with us below, and remember to like and subscribe. And let us know how much you think Tesla is worth. To find out more about Tesla's recent activities, click the next video that appears on your screen. Talk to you there.